Hello everybody, how are you doing? This is me, although you cannot see me on the screen, I am still here. Munther Marji, your host for yet another great live webinar hosted by FX Educast and sponsored by QTime FX. How's everybody doing? I hope you had a great 21 hours of trading since we said goodbye yesterday, and I really hope that you are ready for more action today. I am really happy to be with you again here for one more day, and of course we're going to do the same as we have been doing this week. We're going to take a look at the most interesting instruments that you guys care about, but at the same time there's a new addition, something very exciting here. We're going to be talking about a trading strategy, one of my trading strategies that I use all the time, and I'm going to teach you exactly how to use it. On Monday we talked about the moving average strategy that I really like, and yesterday we talked about how to use retracements, retracement to depend on in your trading, because of course we have a large number of retracement levels that can be calculated. And today we have a third method of trading that I use all the time and I really want you to know about, guys. So let's start this. Let's immediately hit the charts. First of all, of course, we are going to talk about the euro. We're going to talk about the euro, of course, first, like we always do. So guys, first of all, I want to say something about yesterday's recommendations. Yesterday, guys, we issued 10 recommendations, 10. And only one out of these 10 recommendations was translated into a real position. You know, on the euro we had 3 recommendations, none of them were touched, and of course we had also 3 on the yen, none touched, 2 on the pound, none touched, 2 on gold, one of them is touched. So 9 recommendations from yesterday got nowhere. The market did not touch the levels, did not break the levels that we really care about. And that was a little bit disappointing because we had a boring day yesterday, only one position to care about for the past 21 hours. So I really hope that today, being Thursday, we still have 2 days in the market for this week. I really hope that we can see something different. We can get in a number of trades. So let's start with the euro first, guys. Start with the euro. Okay, so I'm going to focus on the chart and I'm going to show you first of all yesterday's analysis, yesterday's recommendations. As you know, we have been looking at a bullish situation here. I really believe so. And the market, of course, responded to that with recovering from exactly where it should start recovering from. It is, of course, our favorite support of all, 109.95. We have been talking about this support for a long time, we got the price to start moving to the upside from almost exactly that level. It was very exciting to see the euro bottom around this area here before moving to the upside. Okay, guys, so this support here, this area here, is something that we have been caring about a lot. And you know, when the price stops at the support, it should stop at, that is a bullish observation. And you can add that to a number of bullish observations that we have been seeing on the chart, especially the ABCs to the downside. 1, 2, this one, the huge one. 3, we have been seeing ABC to the downside for several times, and also finding support at retracement levels each time. So with this recovery attempt, the first part, if you calculate the 50% level, you're going to see that we stopped exactly at the 50% level here. If you calculate it for this part of the recovery, okay, for this part, you're going to see that the price stopped very close to 60.8. And again here, the big one, the most important one, let me just clear these. And also I'm going to clear this one and this one, just to show you how important last week low was. Look at this, guys, 61.8 retracement level for the whole recovery attempt. These 300 pips to the upside were retraced with 61.8. A move that retraced 61.8. The Fibonacci level is 109.95. Of course, we got, I think, 89.88. Only 7 pips below that, and then boom, we started moving to the upside. And that, of course, by itself is a reason to believe in the euro moving to the upside. Only this bottom here, just bottoming this close to the Fibonacci level, gives the bulls a real chance to attack this market and take complete control over it. But up until now, we are still facing some problems, guys. But there are good news. Let me show you where is the problem that I see. You know how much I love my retracements. I cannot say how you doing without calculating retracements. So you guys know one of my top favorite weapons in analyzing and trading the market, which is retracement levels. I love them. I really recommend you use the time, guys, to specify important support and resistance levels, and that you familiarize yourself with how to use them. Of course, if you did not watch yesterday's webinar live stream, we talked about this exact point, how to calculate them. Of course, calculating them is very easy today with a tool to calculate them on every charting and trading software out there. So all you have to do is to click, you know, like on this chart that I use. I don't want to give names. This is not an advertisement. So I just click here, Fibonacci retracements, and I specify the starting point and the end point of the move I want to calculate retracements for, and then boom, that is it. Of course, I also need to specify which levels I care about. These are the key levels, of course, and that's it. But how to use them, of course, it's a little bit more complicated because we have a large number of retracement levels. So which one is need to consider the most important, or which maybe it doesn't have to be one, maybe 1, 2 that we need to keep an eye on. But we cannot keep tracking what the price is going to do around each and every retracement level, because there's a large number. And if you want to get in the market each time a retracement level is touched, you will find yourself with a large number of positions. A very risky situation. That's not how we do it, guys. So if you did not watch yesterday webinar live stream, please go back. You're gonna find it, of course, on FX Educast YouTube channel. We explained exactly how to use retracement levels and how to spot the ones that you should really care about, because again, there's a large number and we need to pick the ones that can help us in trading. So you know how much I love retracements, and again, I'm using retracements to understand what is happening here. So after this C wave is terminated, of course, a new move to the upside is now expected, and it started moving in the right direction until we bumped into the 50% retracement level. And this retracement level is at, if you calculate it for the whole, this whole move, it is at 86. So we have been saying that 86 is the retracement that we need to care about here. Okay, now what has happened since then is that this was touched three days ago. 3 days ago, that since then we did not move forward. So for 3 days, guys, for 3 days we are not moving in the right direction. We have been on a pause, on a hold for 3 days. Okay, so I was checking my connection speed. I hope everything is okay, guys. Good morning, Gabrielle, or good afternoon. I don't know where you are. To me, it is 8:30 in the morning. So good morning to me, good afternoon to you. I really hope you guys are having wonderful trading times, because we are. And if you have been following the stream for the past couple of weeks, when we started streaming on a daily basis, I'm sure that you would be very happy about it, because we have many successful trades, closing in the profit, some of them with very small profit, and some of them with very, very exciting numbers. So talking about the euro, of course, 1086. I'm checking my connection. I'm talking to you. I'm sorry about that, guys. So 1086, of course, it is the resistance to watch for one more day. Yesterday we said this, on Monday we said this, and now again we are talking about 1086. So it is obvious to me that 10 resistance is at 1086. First of all, before we talk about this, this is from yesterday. I don't think we're going to change this in any way, but I just wanted to show you the recommendations we had yesterday. Of course, sell at 975. We completely traded almost 100 pips above that level, not touched, not even getting close to it. Now 91, of course, we didn't to the 90s. Monday high was 86 or 90. I think it was 90. Yes, it was 90 on Monday, but yesterday we did not even get above 81. So we completely stayed below this entry level. And this last one, 1051, was the one that we got extremely close to, because yesterday low, according to QTimeFX, was 53. So we needed only a couple of pips to trigger this buy signal, and I wish we did, because currently, as you can see, we are around 76, almost 25 pips above the entry level. Unfortunately, we needed just a little push to the downside.